What's going on, people? Welcome to Finance and Crypto, a fresh source for the latest news, trends, and updates in the space, so you're always in the know. I'm your host, Rose J. Now, before we get started with the first article that I'd like to touch on, being that this is our first introductory podcast, I want to give a backdrop on why I'm doing this and why I decided to start this channel. I've been involved in cryptocurrency since mid to late 2016. I, like many people, was exposed to Bitcoin way back in 2011 and 2012, but just didn't quite understand what it was and why the technology was so important. After going down the rabbit hole a little bit in 2015 and doing a lot of research as much as possible, I realized this technology fell hand in hand with my philosophical ideology of being a libertarian. The decentralized and deflationary nature of Bitcoin and cryptocurrencies represents a true opportunity for the average man or woman to liberate themselves from the shackles of debt, and that's one of my favorite parts. Of course, I enjoy the tumultuous market swings that this space is known for, but more than that, I really like when the market is stagnant, dull, and going sideways for some time, because in these slow moments when the euphoric nature isn't as high and the hype isn't as crazy, it really gives us an opportunity as participants and members of the community to really focus on what we're doing and why we're doing this. And that actually brings me into this very first article in episode 1 of Finance and Crypto, which comes from the Economics Collapse blog, which states that 22% of Bitcoin investors are using debt to fund their investments. Now, I decided to start this channel to add to the great community of anarcho-capitalists that we already have in the space. Although I will focus on market trends, protocol updates, and everything in between, I really want to become a trusted, rational, straightforward, and educational source on how to approach cryptocurrencies with a balanced head. Just a disclaimer, I have to say this, I am not your advisor and this is not financial advice. Now, back to the article. It says here that obviously investing in cryptocurrencies such as Bitcoin, Ripple, Ethereum, and Litecoins is extremely risky. And of course, we all know that. And experts all over the country are warning that people should only invest what they're willing to lose. Unfortunately, many getting swept in the current euphoric nature surrounding cryptocurrencies are not listening to that sound advice. A disturbing new survey that was just released found that 22% of Bitcoin investors are either directly or indirectly investing in Bitcoin with borrowed money. According to the Lend Edu, a personal loan research firm, more than 18% of Bitcoin investors have used borrowed money to trade the cryptocurrency. In a global survey of 672 active Bitcoin investors, researchers asked traders the method they use to fund their cryptocurrency trading accounts. The majority of investors use banking systems such as credit cards and ACH transfers to fund their accounts. But 22% of the traders revealed that they have not paid off their credit card debts and are holding credit card balances after purchasing Bitcoin, effectively investing in cryptocurrency with borrowed money. Now guys, I don't think I have to tell you this because I know you already know, but credit card debt is one of the most toxic forms of debt that you can ever carry. And investing in anything when you still have credit card balances is extremely unwise. Yes, cryptocurrencies went on an epic run in 2017, but there's absolutely no guarantee that they will continue to rise in 2018. So people, the smartest thing to do when approaching cryptocurrencies is always be as measured as possible. This is not any type of financial advice, but when comparing these markets to any other traditional markets, whether stocks, bonds, real estate, there's no comparison in terms of the volatility. As a result, it's always best to only invest what you know you can lose. It's always good to be measured, and to really think wisely, when you're thinking of getting involved with a particular protocol in this space. You should never rush to anything, because what goes up ultimately will come down. And if you're patient and if you're ready, whatever you're looking to get into, the time will be right, as long as you have a plan and a strategy and you execute it. Everything will be fine. Here at Finance and Crypto, we like to help as much people as we can make really balanced, educated and wise decisions when entering this market, and that's what we're about. And I'd like to make sure that I help anyone that I possibly can. And in regards to this article, I really wanted to get this information out, so that way we can have just another thought, instead of just the euphoric nature of just jumping in head first, feet first, and not thinking. I wanted to start this channel to bring a level-headed approach, so that way I can bring you guys news, bring you guys information, but also bring it to you from an educated perspective, and continue helping the community. So if you do like this information and you like what we're about, please like, subscribe. And if you have any questions, any concerns, or any things that you wanted to reach out to me about, or maybe something I can do better, please don't hesitate to drop a comment down below, and we'll look forward to see you on the next one. Stay cryptic.